Hello friends, welcome to the video on the GST regime. Today I will discuss on the tax credit note versus the commercial slash financial credit note. So I will take you through the GST norms, what does the law say, and some practical experience or challenges or considerations which you need to have in mind from a business perspective. So today we are going to cover the topics, like I said earlier, what is a credit note under GST? How is it different from an accounting credit note? Conditions and when to issue the credit note? What is a commercial credit note? What are the conditions to issue a commercial credit note? And the practical considerations when you are contemplating to issue a commercial or a tax credit note. So credit note is governed by section 34 of the CGST Act 2017, which went through further amendments in the recent years. So credit note means a document which is issued by a registered person under subsection 1 of the section 34 of the CGST Act. Now, when I say about the issuance of a credit note, it means it can be issued only by a registered person. And yes, it is different from the accounting credit note which we used to issue in the erstwhile regimes. If a person is not registered under the GST, he is not entitled to issue the credit note. And what is the difference between the accounting credit note and the GST credit note is the GST credit note impacts your tax structure or the tax position today. Because any credit note which you issue, if it is a tax credit note governed by the GST, it has implications when you file your returns and on the input tax credit claimed as well. So a credit note can be issued under the following circumstances. So there are various circumstances in which you can issue the credit note. So the first case can be where the taxable value shown in the invoice exceeds the taxable value of the supply. So suppose I have to charge my client rupees 10,000, but I ended up charging my client 11,000, which is where I have to reverse off this 1,000 rupees to my client. There can be another scenario wherein the tax charged in the invoice exceeds the tax payable on the supply. For example, I have to charge my client 12% GST while I ended up charging 18% GST to my client. So what have I done? I have charged my client 6% extra GST for which he is entitled to a credit note, or I have to pay him back the 6% extra which I have charged him, and in turn he would have paid it to me. The third scenario can be the goods supplied are returned by the recipient. There might be a non-agreement which might happen between the supplier and the client, which is where the client is not willing and he intends to return the goods to the supplier. There can be a fourth scenario as well, wherein the goods or services which the supplier has shared with the client are found to be defective, and which is where the client is returning back the goods back to the supplier, and in turn the supplier has to issue the credit note for the same amount for which he has received the goods back from his client. All right. Now, let's discuss on the credit note, the conditions, and when to issue a credit note. So when there is no change in the taxable value or the tax amount, the example which we discussed in our previous slide, a credit note need not be issued unlike the existing business practices. Only in an event the taxable value or the tax amount is changed, in that event you can issue the credit note, because like I said earlier, the tax credit note impacts the GST position which we have today. A credit note has to be issued by the supplier and not by the recipient per se. In our earlier days, the recipient or my client could issue a debit note and send the goods back to me. But in the current regime, this will not work or this is not allowed. In the current regime, I have to issue the supplier, he has to issue the credit note to his client. So, from an accounting purposes, which we used to do earlier, it is not relevant for a GST purposes today. Now, a very important topic and a very important time barring limit which my GST authority has set today is once a credit note is issued, the details of the credit note should be declared by the supplier in the return of the month of the issue of the credit note. However, if not declared in that month, it can be declared in any return prior to September of the following the year in which the original tax invoice was issued or filing of annual return, whichever is earlier. So a very, very important pertinent point to note here is any credit note or any invoice which I am issuing today stands the limit of 6 months or 180 days from the expiry of any financial year. So, for example, for an year March 2019 or maybe April 2019 to March 2020, the invoice will stand the limit till September 2020 only, beyond which if the invoice is expiring or you're not getting the payment or the client comes to you and tells please issue me a credit note, that invoice becomes a time barred invoice and therefore the declaration cannot be done by the supplier himself. So therefore, very important point and very pertinent to note is the credit note, whatever you are issuing before 180 days from the expiry of the financial year, has to be declared in the month of the issue of the credit note by the supplier in his returns. The supplier will not be permitted to claim the reduction in the output tax liability if the incidence of tax and interest has been passed on to any other person. So suppose I have sold the goods to my client, but the output tax liability which I have to pay, I have passed on that to a different person or to maybe to a third party, or if the recipient fails to declare the details of the credit note in his returns, you will not be entitled to claim reduction in the output tax liability. Another case is the issuance of credit note would not be relevant if the recipient turns if the recipient treats the returns of goods as an outward supply and raises a tax invoice in this regard. So if the client is treating the returns of goods, maybe he is sending it back to you as an outward supply, and if the client issues a tax invoice in that regard, in that case as well, the issuance of credit note is not relevant from a GST angle. So let's go on to what is a commercial or a financial credit note. So going back to the previous example on the time barring of the invoice, that is 180 days from the close of the financial year. In our example, if my financial year is April 19 to March 2020, in that case, the time barring limit is 30th of September 2020. So credit note reducing the value of original supply without reducing the tax attributable on it is called a commercial or a financial credit note. So in simple terms, if I am issuing a credit note to my client without mentioning any tax on it, it is called a commercial or a financial credit note, which will not form part of your GST returns. So as per the GST circular, the commercial credit note transactions, they do not be reported in GST returns and be kept out of purview. So, what are the conditions in which you issue a commercial or a financial credit note? So, the commercial or financial credit notes are issued in the following conditions: discount offered post supply. So, suppose I am selling to my client that in case you sell 1000 units of my good, I will be giving you a 10% discount on the volume. So what have I done is I have charged my client 1000 units of goods and charged a GST on that. I have filed my return and the time has lapsed. Or maybe after doing all the invoicing, I find that I have to give a volume discount to my client. In that case, I need to issue a commercial credit note because the output GST which I would have remitted to government and my client also would have claimed the ITC back on that. So therefore, the discount part which has to be issued to my client now should not be covering as a tax transaction. If the credit note is related to a nil or a non-GST related supplies, again which is not under the purview of GST, we can issue a commercial or financial credit note for that. Refund of consideration where the tax is not refunded back. So suppose I enter into an arrangement with my client and I sell him 1000 unit of goods wherein I have to refund back to my client which is not actually covering the tax portion of it. Suppose I'm giving him a discount of 5000 rupees, but after charging the complete tax on the 1000 goods initially which I have sold to him, in that case, again, we can issue a commercial or financial credit note without impacting the tax on it. Now, there can be business challenges where a client did not account the invoices due to practical challenges within the time barred limit. So suppose I have issued an invoice to my client on 30th March 2020 for which the time barring limit is 30th September 2020. Due to some practical challenges at the client's end or some practical challenges at supplier's end to share the invoice or the client is in non-receipt of the invoice, some ERP challenges are there with the client. The client is not able to account the invoices within time. Therefore, what happens? My invoices become time barred, and this again inflicts the section of commercial or financial credit note. Another case can be non-payment of invoice within the time barred limit. Again, request for the issue of the credit note. So within the time barred, so in our previous example, on 30th March 2020, I have issued an invoice to the client and the client has not paid me within the time barred limit, but the client is requesting me to cancel the earlier invoice and rebill to the client a new invoice after the time barring. So the credit note which can be issued now can be only a commercial credit note and I cannot issue him a tax credit note now. Now let's see what are the practical considerations when you are doing the business. So if the credit note is issued within the time barred limit, that is 180 days from the close of the financial year, the credit note has to be issued with the GST amount that is a tax credit note. So if it is within the 180 days time barring limit, you can do well and issue a normal credit note including tax. So what will happen is I will have an outward GST liability. I will issue a credit note where I will show this as a reduction of my output GST liability. In turn, the client who would have claimed an ITC on the invoice will also do a negative entry in the GST return when putting the entry for this credit note. And the supplier has to ensure that the client has reversed off the input tax credit which he has claimed in the return. Now, let's look at the commercial credit note scenario. So, let's go for case one. In case 1, the client has claimed ITC but has not paid the invoice to the supplier. So in this case, the client has to reverse off the ITC claimed earlier within the time barred limit with interest as applicable. So for example, suppose my invoice is dated 30th March 2020. The client has claimed the input tax credit in April itself, but the client has not paid me the invoice value. So in that case, the client has to reverse off the input tax credit which he would have taken in his books or maybe in his returns if the month in which he has claimed it, if he is not reversing within the same month. Suppose he claimed it in April, but he is reversing it off in September, just before the time barring. In that case, he has to remit, he has to reverse off the ITC along with interest for the 4 months. So May, June, July, and August and September. Pardon me, for 5 months. There's another case, which is a case two. So client has not claimed the ITC and he has not even paid the invoice to the supplier. So in this case, you can issue the commercial credit note without mentioning the GST amount to the client. In an ideal scenario, the pre-GST amount needs to be issued as a commercial credit note. Otherwise, it will become a cost to the supplier. Now, let me explain this to you with an example. In March 2020, I issued an invoice to my client with GST. For example, I charged the client 100 rupees. I remitted a GST of 18%. I issued the invoice of 118 to my client. I would have remitted 18 rupees GST as an outward liability to the GST government. What happens? The client also has not claimed the ITC in his returns, or even if he has claimed, he has reversed it off before the time barring limit because he has not paid it to the government, or maybe it's not claimed it from the government. Now, in this case, if the client comes back to me and asks me for a cancellation of the earlier invoices and rebilling of the same, so if I am cancelling the invoice and issuing a commercial credit note including GST, the 18 rupees GST which I have earlier remitted to the government as a GST outward liability cannot be claimed back by either the supplier or the client in any form. The GST law debars you from the same. Therefore, that 18 rupees becomes a P&L hit or a cost to the supplier's business. So in an ideal scenario, if you're rebilling the same invoice back to the client, issue a credit note, which is a commercial credit note of rupees 100. Let the 18 rupees earlier liability remain with the client and issue him a new invoice for 100 and 18% GST on that. So the total liability which should be lying with the client should be 136 now instead of 118 earlier, which we were contemplating. So sometimes the clients, due to practical considerations, go back to the supplier and tell that these are the challenges. Please issue me a commercial credit note, including the GST amount raised earlier. So just try to be practically expedient or have a practical thought around it before issuing the commercial credit note, including GST amount to your client. But in all practical purposes, to maintain the business continuity, sometimes the suppliers have to issue to the client, including GST, and that becomes a cost to the business. So, this is on the tax credit note and the commercial credit notes. You can reach back to me for any queries. I will upload the slides or this deck in the comment section below. I will provide a link for that. You can please access and please share your feedback or comments or any kind of practical questions that you might have from the business standpoint in the comment box, and I will try and answer all those queries as and when time permits me. Thank you.